And for all of you who love a good ETF segment but want to know more about how some common mistakes can be avoided, this one is for you. Jamie Hatter joins us now with his quick guide to avoiding the traps of ETF investing. Jamie, welcome back to the program.
Thank you very much.
Now look, it sounds simple, ETF investing, particularly the passive investment vehicles out there, but it's not completely 101 investing. What are some of the common errors, first, William, that you come across in your time in the industry?
Well, generally speaking, ETFs are a very simple vehicle, but from an execution point of view, you need to think about the best way to execute for any investor. So, a few simple rules, very from the start, is that you should not trade any ETF in the first 15 minutes of the ASX opening. So, the market opens at 10, but it's a staggered opening, and it opens over about 10 minutes. So, the A's open first. So, at 10:01, you've got ANZ trading, but you don't have Westpac, for example. So, Westpac won't start trading until about 10:10. Hence, it's very difficult to price an ETF during that first 10 minutes as the market slowly opens over that period. So the spreads are a little bit wider, and for anyone who's actually trading an ETF during that time, they're definitely not getting the best execution in that first 15 minutes. So outside of that, the same thing goes for the closing auction on the ASX. So the market closes at 4 o'clock, but at 4:10, there's a closing auction which takes place, and it's a one-off snap, takes literally less than a second. And during that one-off snap, you can't really price an ETF either in a particular one-off snap. So as a result, the spreads are a little bit wider for anyone looking to trade at that time. So if you're looking to trade an ETF, it's extremely important that you trade between 10, 15 and 4 p.m, that you don't go outside of those hours for optimal execution. And just added to that, you should always place a limit order when placing an ETF trade. You shouldn't trade at market. There's just inherent volatility in the market, and you want to ensure that you get the best price. So if you're trading at a limit price, you might feel that you might buy through the volume that's on screen, but if you have a large order, you can contact any of the capital markets trading desks, and from that, we can put on any size on screen so you can fill in one line. So sticking to those simple rules, you can obviously obtain the best execution on any ETF.
What are some of the best practices? I know individually, and you can't go and give advice as to individual circumstances, but what are some of the traits that you see from people who go and do things right when it comes to ETF investing?
Well, if you do them right, then obviously you're obviously attaining a price that's as close to the net asset value of the fund, which is the fair value of the fund. So if we take an Australian equity ETF, there's an INAV which ticks on the exchange live that you can view to see the fair value of the fund. So as the markets open and all the stocks change price during the day, the INAV update, so you can check your price against that. For international equity ETFs, it's a little harder because during our trading time, Europe and the USA isn't open. So you can never actually fully price in that because the prices will be stale at that time. But everything's moving within the market. So if you stick within your agreed limit price, you will obtain the best execution.
So when it comes to ETFs, this is all really interesting. I hadn't given it a lot of thought before. When you see increased volatility in equity markets, does the volatility in an ETF correlate with that?
Yes, it does. Because an ETF is a live vehicle which is trading during live market hours, and everything that is within that ETF is taken into account. So if we take an international equity ETF, obviously the US is closed, which might make up a large part of it, but then we have foreign exchange trading, which is live. Those prices are adjusted. We have Asian futures, which track the S&P 500. So we can see how the S&P 500 might be tracking during that time. And you can also run like correlation analysis to see how these stocks move in these certain environments. So all that's applied into the price on a live basis, and hence the fair value is the best estimate of what that would be during any particular time in the day.
Jamie Hatter from VanEck, thank you for joining us on the program today.
No problem at all. Thanks for having me.
Thank you.